2023 is officially in the history books. I'm Ron DeLegge with ETF Guide TV. So what kind of year was it for you? Well, I asked you on our community chat tab, and this is what you had to say in terms of investment performance for 2023. I'm glad to report that the vast majority of you told me that you had investment gains for 2023. That's good, because financial markets, as you're about to see in some of the forthcoming slides, was up bigly. And a very small minority of you had really good results, gaining better than 20% as far as your portfolio performance. That includes IRAs, Roth IRAs, 401k plans. And that's the type of performance I like to see. And then a very small minority had investment losses. So we're going to give you some context about what these numbers mean as they relate to some of the key ETFs out there. And let's begin with the major asset classes, which, as you can see here from this performance chart, the bulls won in 2023. Risk assets from stocks to cryptocurrencies soared in value this year. The runaway leader and winner was Bitcoin, gaining 152% in 2023. Now, keep in mind that Bitcoin, for those of you saying, well, I should have put all my money in Bitcoin. Well, no, you should not have done that, as some of the pro-Bitcoin constituents are trying to push you to do, because Bitcoin crashed in 2022, losing 65% in value. This year, it gained 152%. So this shows you and illustrates that Bitcoin is, first of all, not a stable asset. It's a volatile asset, and it's also a non-core asset. So if you own it, and I'm okay with that, I have no problem. I'm not giving you an anti-Bitcoin message here. But if you do own Bitcoin, it belongs only in one place within your investment portfolio, and that's in the non-core portion of your portfolio. Now, as far as these other asset classes, everything was, for the most part, up. Commodities were flat. SDCI, as a group, they were flat. And then as far as, S&P 500, if you take a look at how it compares to some of the other major U.S. ETFs, tracking U.S. equity benchmarks from the Dow Industrials to the Nasdaq 100, it did pretty good, but the runaway winner was still the Nasdaq 100, the triple Qs gaining almost 55%. Technology helped a lot. Also, the mega cap performance that dominated 2023 also helped a lot. In terms of how difficult it is for stock pickers to beat the S&P 500 and just some of these indexes in general, 72% of stocks actually underperformed the S&P 500 in 2023. And you can see from a year-to-year basis, it's constantly changing, these figures, but the numbers are still showing us that the odds are stacked against stock pickers. It's very difficult to pick individual companies that outperform the S&P 500 on a year-to-year basis, and that's why I tell you that the basis or the foundation of your portfolio should be, this is for the core portion of your portfolio, should be these low-cost index ETFs that help you avoid some of that underperformance. Now, in terms of the IPO market, this was kind of a surprising statistic that I wanted to share with you. There were just 153 IPOs, also known as initial public offerings. These are basically newly minted publicly traded stocks or companies. And this pales in comparison to previous years. And it kind of surprised me because it was a pretty good year for the stock market. And usually when it's a good year for the stock market, you see a robust IPO market. Well, that didn't happen in 2023. So those of you wondering, well, our investment bankers, should I be worried about them? Well, don't worry about them. They're going to be just fine. The Lambo monthly payment is still safe, and they're not going to go broke. They're still going to make a lot of money, these investment bankers. The point is there's just less IPO deals to go around. You'll also notice that there was an average 2% gain for the typical IPO, which is way below the performance of the S&P 500. Again, getting to that point of just how difficult it is to be a successful stock picker. In terms of S&P 500 industry sector performance, there's 11 sectors, 8 were up, 3 were down. The top 3 really drove the performance of 2023 for the S&P 500. The XLK, which tracks technology stocks, the runaway winner, gaining 56%, but not far behind was communication services, XLC. Companies like Meta Platforms are included in XLC. And then XLY, consumer discretionary, also performing very strongly. By the way, I should mention those bottom 3 performers, you'll notice that the losses were pretty modest. So not what we would call bear market level or bear market type losses that approach 20% or more. But for the most part, lots of green for industry sector investors and ETF investors that use these sector ETFs. In terms of some of the single stock ETFs, they delivered some impressive results. These are ETFs that track individual stocks with daily leverage. The 3 that I've got here use 1.5% daily leverage, and so that's bullish leverage on the upside. So you'll see AAPU is linked to Apple, TSLL is linked to Tesla, NVDL linked to NVIDIA. Outstanding performance across the board. You can see here that this is the time you use leverage is number one in a market that's trending sharply in the same direction that you're trading. So for bulls, it was a great year. And the bearish ETFs linked to some of these same single stocks were clearly not good performers. But if we get a sharp pullback or a downturn, that could obviously change very quickly. So keep your eye on some of those ETFs, and we may bring up some of those tickers if we get that kind of market in the future. Coming soon, our spot Bitcoin ETFs in the U.S. Now, they've existed outside the U.S. for a couple years now. The first place we saw spot Bitcoin ETFs ever launch was in Canada. I believe that was in 2021. Well, finally, after a long await, the projected launch date is going to be January 9th or 10th of 2024. That's what many industry experts in the ETF marketplace are expecting. And these are some of the ticker symbols for you to put on your watch list and some of the firms behind these spot Bitcoin ETFs. We are probably going to see numerous spot Bitcoin ETFs all launch on the same day. It's way too early and premature to be doing any sort of analysis on which of these spot Bitcoin ETFs is going to be the best choice. So don't ask me, because we're just going to have to wait and see. But let me just say that spot Bitcoin ETF market is going to be very commoditized, just like the market for S&P 500 index funds. The funds with the most competitive fees will get all the assets. They'll also get all the trading volume, and it's likely to be one of the firms on this list that I've given you here. Again, these are the ticker symbols, so mark them down. And some of these funds will also, and this will be something I'm watching closely at, is the robust options trading market. Which of these particular spot Bitcoin ETFs is going to have the best and the most robust options trading volume? I can't wait to find out. And I also can't wait to find out to see what those ungodly premiums are going to be for the call and the put options. I mean, it's going to be bonkers. In terms of the really, really wealthy folks, Bloomberg's Billionaires Index, this shows you the top 11. And leading the way, Elon Musk. And then, some things that I want to point out about this list that you might not observe instantly. But first of all, the concentration of billionaires in the United States is very high. That's number one. Number two, take a look at where all these wealthy folks are making their money. The industries where their wealth is being concentrated and made is in technology. And so I think from an investment perspective, that tells you sort of what you should be doing with your own investments, right? I mean, these folks have built fortunes because of technology. And so I think orientating an investment portfolio in that direction certainly has proven to be a winning formula. And the other thing I should mention too is the level of wealth creation is just off the charts. The top 11 folks here control $100 billion plus. This is net worth. I mean, the type of numbers that we're talking here, I mean, this is like giving a new definition to filthy rich. In terms of your own planning and thinking about what's coming ahead in 2024, some of you may be approaching retirement in 2024. Well, I'm pleased to announce that we're going to have a fresh update to my book, my ebook, and this is going to be free to all of our audience members, 60 Smart Ways to Retire Better. And those of you that are going to be approaching retirement in 2024 or in retirement in 2024, this will definitely be a book, an ebook that you want to download and get. And like I said, it's got 2024 updates, and I'll let you know it should be available here in the next week or two. We're putting some final touches on it. Just two quick things for those of you in this situation. Again, approaching retirement in 2024. Two things to remember. First, retirement is your last chance as an adult not to screw up your life. Unlike third grade, there are no do-overs or second chance with retirement because you all growed up. The other point is in retirement, it's your account balance. Your account balance, and I know some of you have become infatuated with your account balance, especially after a great year like 2023. But keep in mind that in retirement, your account balance does not determine your standard of living. It's your income that determines your standard of living. And if your account balance from which that income is derived gets wiped out or faces a major setback, then guess what happens to your standard of living? It will suffer. And so the way to protect yourself is to make sure that your retirement portfolio has what I call an adequate margin of safety or cushion. And this is the investment framework that I teach on this channel as well as my online courses and that I endorse because I know that it works. And so the margin of safety portion of your portfolio will grow as you approach or reach retirement. It should be much larger because you cannot afford a major setback. Your time horizon is more compressed than investors that are still saving and investing for retirement. So you're in a different place. And so having an adequate cushion or margin of safety is so crucial. That complements, by the way, your core and your non-core portfolio. It does something completely different than the core and non-core. You're de-risking your portfolio and you're protecting your principal with zero volatility. And the margin of safety tool that I built at ETF Guide TV, or ETFguide.com rather, will help you to calculate the size of your margin of safety, what that should be, as well as implementing it, and then, of course, monitoring it. So be sure to check out that tool. What will be ahead for ETF Guide TV in 2024? Well, before I tell you, I just want to give a shout out and a huge thanks to our sponsors and the world-class firms that make our original programming possible. And this is just some of the firms that have worked with ETF Guide TV in 2023. And I'm pleased to say will work with us again in 2024. So again, take advantage of the world-class, innovative investment solutions and ETFs that some of these firms are offering. It aligns very well with what we're teaching you here on ETF Guide TV. Now, as far as 2024 programming, this is how we built it. The only type of programming that you will see that we do here is content that you don't see anywhere else. It's content that I deliberately built that is unique, that has an edge, that's different. And these are some of our leading programs, our originals, as we call them: ETF Battles, Portfolio Makeover, First Look ETF, Crypto versus Crypto, Spotlight. We're going to have new seasons in 2024 for each of these original programming or programs. And we will also be adding a couple of new shows for 2024. More on that later, but I'll just keep that as a side note and keep you in expectation. So a lot of fun things and exciting things that we're doing here for 2024 on ETF Guide TV. And speaking of ETF Battles, one of our judges, Dave Krinsis, sent me this photo. He bumped into Jamie Foxx hanging out with the Hollywood elite. By the way, he is Hollywood elite. He did win an Oscar. And Wanda from In Living Color is still my favorite Jamie Foxx character. You got to look that one up. Wanda from In Living Color. I mean, just hilarious. And Dave also informed me that Jamie Foxx is actually his stage name. His real name is something else. I don't know what it is, but his stage name, Jamie Foxx, was inspired by the late comedian Red Fox, who played Fred Sanford on Sanford and Son. So that's pretty cool. Dave, when you bump into Jamie again, ask him to come on ETF Guide TV. We'd love to do a portfolio makeover. Let's see how his investment portfolio is done, or maybe he can make a guest appearance on ETF Battles. I don't know, but that's pretty cool. In terms of key takeaways for this year, first of all, and also looking ahead to 24, first of all, spot Bitcoin ETFs are coming here in the U.S. Put this on your calendar. June 9th or 10th is the likely launch date that many in the industry are expecting. We gave you the ticker symbols of some of those leading spot Bitcoin ETFs, so watch for that. As we explained earlier, it's so hard to beat the indexes, stock picking. It's not completely gone the way of the dodo bird, but it's difficult to outperform S&P 500. And for that reason, we tell you to make the core of your portfolio, the foundation, those low-cost index ETFs that are actual proxies for the core asset classes that they're tracking. And then, of course, always invest with a margin of safety cushion. That's for everybody. Now, the actual size of your cushion, well, that's going to vary from investor to investor. As you approach retirement, your margin of safety cushion is naturally going to be larger. Whereas if you're still in the early stages or mid stages of saving and investing for retirement, your margin of safety is likely to be much, much smaller in size. And then, of course, continue shifting money into the tax-free zone, taking advantage of ultra-low U.S. income tax rates, which are only going to last another 2 years. So things like Roth IRA, Roth 401k, Roth conversions. For those of you that earn too much money or want to supplement your Roth contributions, you can use things like LERP, which I think are very effective tools. I use them myself. And so that's pretty much it. Have a safe and healthy 2024, and we wish you the best of good health as well as prosperity, and we'll see you in 2024. I'm Ron DeLegge with ETF Guide TV. Thanks for watching.